Okay. All right, I think we are live. Let me just double check. We are going over. Alrighty, it looks good on that. Let me check my sound. Okay. All right, I think we are live. Let me just. All right, cool deal. Cool. Let me turn up my gain a little bit. Um, there we go. Just so my microphone would go up a bit. But we are live. What's up? So today, really just going to be covering the all of the CPI data inflation release that's coming in about 15 minutes. So we're just going to talk a little bit before then about some headlines and news we're getting in anticipation of that. And then, of course, after we do go over headlines, things of that nature, we're going to then jump into the CPI data. Again, that release is at 7:30 my time, which is about 13 minutes from now. And then we are going to go forward and talk about, how I'm expecting this to affect the markets. Okay, so it's going to be a pretty easy stream today. I'm not expecting this to be much longer than about an hour. But I did want to be able to give you guys like updated information on the CPI data, inflation data, and what we are seeing from it. So what we're going to do, first and foremost, we're going to just jump into some news we've been getting about inflation data. And then we're just going to talk a little bit about expectations, of course, kind of build this thing up until we do get the news in about 10 to 15 minutes here. So let's go ahead and let's just jump straight over here. And what we can see is we've actually been getting decent news about this. So I want to talk about what this is going to mean, and then exactly how I'm expecting all of this to play out. Okay. So we got an article about, this was 12:39 p.m. So, I mean, this was roughly about 12 hours ago, 15 hours ago. So we got news from the White House. Now, personally speaking, I think the White House should kind of just like stop. That's just my overall opinion is like the the White House needs to focus on the White House's doings. It doesn't need to release press statements and things about this because they're not the ones who are completely doing all of the gathering of information for this thing, right? I just feel like it's best that they kind of just lay back on this one and just, kind of let it do what it's going to do. But, hey, what can you do? So what we got was them saying that the inflation data is already out of date. Now, it says, with gas prices tumbling and tentative hopes that U.S. inflation might have peaked, you'd think the White House would eagerly await the upcoming release of new data on consumer prices for June. So clearly, they did not. But President Joe Biden's aides have aggressively downplayed expectations for Wednesday's consumer price index release because the state of technical factors and how CPI measures things like gas prices. June CPI data is already out of date. Now, this is true, right? If we do go ahead, let's just look up, let's go over to, I'm trying to think of the best website. Let's just do WTI crude chart. Now, what they're talking about whenever it comes to this is what we actually have been seeing for crude oil. Now, if you look at crude oil did peak in March. Now, whenever we saw another climb up to the top side here, we actually did get back up to about 122 on crude oil. So we never even got back up to the high that we did see back in March. But ever since then, we have pretty consistently been falling to the downside here, right? Now, what they're talking about is that although we may be seeing some type of growth from inflation coming up from the release in, again, about 10 minutes here, they're saying that although it may be higher, may be elevated, it may be 8.8, 8.9, that's not really a good representation of what we're actually seeing in the current day because, again, we have been seeing for the last about roughly, honestly, about 30 days or so that oil prices have been pretty consistently falling. So although there is some reality in that, although there is some truth to what they're saying that June CPI data is already out of date, that doesn't matter, right? Because at the end of the day, what has the Fed been doing? The Fed has very simply been making their basis. They've been making all of their decisions based off of the CPI and inflation data that we receive based on the prior month. Okay, so it doesn't matter if it's out of date or if it's not out of date. They're focused on each individual release, and what each individual release gives us, they'll make a decision on the interest rate hikes that then go into place. Okay, so they need to not go so much as trying to cool people down and calm people down, because historically, when you try to calm people down and just try to sugarcoat things that are genuinely a problem, you tend to hurt people more than you help them. So overall, I don't really like what's going on there. I don't really like how they're trying to oh no, it's no problem. Even if it's at 25%, what's the big deal? It's out of date. It's a lagging indicator. No problem. No, let's not do that. Okay. So although we did, of course, see this, there is some truth to it in the fact that oil prices have gone down. Now, with that as well, we have been seeing also that things have been looking better in terms of job reports. Okay. So what we can see is that June jobs reports come in saying that U.S. economy adds 372,000 jobs with unemployment rate steady at 3.6%. So we did get this news about 5 days ago. So the fact that we are starting to see good news coming out in terms of what is happening in the overall economy, at least for the time being, when you do mix that in with the fact that oil prices are also consistently falling over the last couple of days, one could go ahead to say that things definitely seem to be in a better position than they were a few months ago. So overall, that is a beneficial sign. And that is something that I am kind of expecting and looking forward to from today's release, is that I do believe that that could be a good sign for what we do see in the market, especially going forward. Because as we do remember, every single time that we would see inflation numbers come out, what would happen is that the market would go flat. And as soon as it would go flat, we would get inflation data and we would fall. Then it would go flat again. We would get inflation data. It would fall. Now we're going flat again. We're getting inflation data, and sure, we may start to fall to the downside here. But the entire narrative that's been driving this market down, which has been inflation, which has been the overall death of the economy, and all of these crazy things, right? Every single time we get one of these releases, it's brought us down. But I do believe that the narrative, like I said, of CPI data and inflation is starting to slow down and come to an end. Now, what we can see, let's just go ahead and go look at the core CPI. Let's take a look at this. Let's go down here. Let's go to the U.S. Bureau of Labor Statistics, and what we can see, I'm trying to go to the spot. I want a chart. Here we go. So let's go out to this. Okay, so this was in May of 2022. And what we can see is that the CPI data itself, you know what? I actually want to get a chart. Let me see. There's a certain website I use. I want to find the chart. Give me 1 second. I didn't have this pulled up before this. Let's go here. Now, no. So the CPI data is going to be released in roughly 7 minutes here. Okay. No, this isn't the one I want. There's a specific chart, and I don't remember what website it was on. Let's just go here. Maybe we find it on BLS Gov. Here we go. Okay. Nah. And really right now we're just waiting for the inbound news. I want a more short-term chart. No, I wouldn't personally be trading right now. I definitely wouldn't be trading right now. I don't think that's a good idea, personally. Overall, I can't find the chart that I was looking for. It was this very specific chart. It was one that had a lot of details. But the reason why I believe that this narrative is coming to a close, I talked about it in yesterday's video, right? In yesterday's video, what we went over was the fact that the core CPI itself has been falling. What is the core CPI? The core CPI is the inflation rate, but minus food and minus energy, okay? And what we can see is that we topped out at 6.5. I think it was back in March. And from that point forward, we are now down to 6.0 in last month's report. So what that tells us is that although we are seeing inflation, specifically within oil and within the food industries, everything else is starting to pull back. We're starting to see general prices starting to fall back to the downside, which is a beautiful sign for the overall economy itself. Now, why is that? Well, realistically, whenever you start to think about it, if we're starting to factor in just the CPI, we're just focusing on inflation from the CPI itself, that's going to be specifically based off of food and specifically based off of oil. The only reason that is still going up is because, again, food and oil. Everything else is falling based off of the core CPI being down overall, about 0.5 just from March itself. And so whenever you factor in the idea that we are starting to see oil prices coming to the downside, which is generally followed by food prices then coming to the downside, as we don't see that gas surcharge being applied to every single restaurant and grocery store and things of that nature, one could only assume that if we do go forward and we continue to see the core CPI falling, mixed in with the fact that we are again seeing gasoline prices falling right now, food prices likely starting to follow soon thereafter, that would be a good assumption to make that we could very possibly be finding the peak for inflation soon, if not this month coming. So I am under the belief that we will probably see a little growth, right? We of course did see that June did see a strong little spike here in the CPI. We did see inflation continuing up through June. So it is very possible we do see 8.8, 8.75, something along those lines. We will know in about 5 minutes here. But overall, I do believe with the fact that all other commodity prices for the most part are falling, the fact that gas prices are falling, food prices are seemingly consistently falling. We're starting to see some of these other aspects of the inflation rate continuously falling. I personally do believe that we are in a position that this narrative of inflation being the end of the economy does seem to be coming to an end, which could be marking of soon, possibly soon, a sign that this big narrative that's driven this huge crash to the downside, I do believe it could be coming to a close soon, because people say, well, no, it was the Luna collapse that drove this to the downside, or it was the Celsius collapse that drove this to the downside. Not really, right? Once we started to get information over the last couple months, realistically, I would say since about February to now, this has been the driving factor in the macro environment that has led the majority of stocks and all of these other cryptos and ETFs and everything really to the downside. And we've seen the Celsiuses and the Lunas all as a result of this falling market. So the main narrative that's been driving this market down, especially something like VOO, if we go over on VOO, wherever I have that thing at, VOO is the overall broad stock market. But look at the stock market. What's been driving the stock market down? That narrative could very possibly be coming to an end relatively soon. And so for that reason, I do believe we could be marking a change in times pretty soon here, as we could possibly go into a new point in the market. Okay, so personally, I'm not all too convinced that if we do start to see inflation falling, that we will immediately start to see the market rallying. One thing we have to understand is that although June job claims did go forward, and of course we did again see that good news there, at the end of the day, we still have a lot to worry about. We're likely going to see that we're going to go into a recession, a technical recession based off of 2 quarters of negative GDP growth. That's likely going to happen. We can still see that rent prices are still up. Those are still elevated, but the average wage is still down. It's not growing as fast as it needs to. We're seeing job loss still happen in the current date, which I do think will be reflected in data very soon. And all of these things that are affecting the broader economy will not immediately be changed just because inflation starts to peak. I think the narrative might shift over to the recession. I think the narrative might go from inflation to recession. And once we conquer recession talks, then we can start to talk about a bull market. But until then, I think there are still fears, but this main narrative of inflation itself could very possibly be coming to an end, or at least a peak relatively soon. So with that said, we are going to see that the overall CPI data, inflation data, will be released in 1 minute. So we're going to go ahead, just hang out and chill, and we are going to go forward and see exactly what is released. Now, I do believe that the best place to find the inflation data will be over here on BLS_gov. This is where I did find it last time. If there is a Twitter that posts it faster than this one, of course, let me know. But I do believe this is the best place to be. So we're just going to kind of hang out here. Should be less than a minute. And we'll see what happens. Payroll employment up 372,000 in June 22, down by 524,000 since February of 2020. Wow. Should be released in about a minute here. Now, it's good to at least see that the unemployment rate and the unemployment rate is still continuing to the downside here, because that always does have an opposite effect of the job openings rate. What cryptocurrency should we invest for the long term and also short term? Personally, I'm looking at simply, it should be out pretty soon here. Personally, I am just looking at Bitcoin and Ethereum right now. I'm not really too excited about anything else. Ada Cardano's been doing amazing, but once that Vassal hard fork goes into effect, that very possibly could. CPI for all items rises 1.3% in June. Okay. So that's definitely not the best. The consumer price index for all urban consumers, CPIU, increased 1.3%. Oh, man. The all items index increased 9.1% before seasonal adjustment. Okay. Let's go here. That's a huge jump, I'm not going to lie. I'm trying to see the very, very specific numbers. The index, so the core CPI rose 0.7% in June. Okay, that's a lot. So that's back up to 6.7. I'm trying to look for... There we go. Okay. I'm looking for the seasonally adjusted one. I hate how they release this in a big ass thing here. Okay. Unadjusted season. Okay, seasonally adjusted. Man, that's pretty big. 9.1 is huge. That's huge, 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 huge. So food is up substantially. Food seemed to drive it up about 12.2. As we can see here, let's go. Yeah, that's substantial. Market is not going to like that. That's for sure. The market is not going to like 9.1. I know that. That's for sure. Personally, I'm not going to short it because I don't think I don't trade on these things, honestly. But it would not surprise me at all if this thing starts to dump. Yeah, here we go. Sheesh. 9.1%. We missed by 3.3%. Okay. Gonna be a crazy day. And again, remember, I do believe that this could directly be an impact of what we were seeing from gasoline prices going up. I didn't think we were going to see it that high, honestly. I didn't think food was going to raise that high. But of course, there is always the application of gasoline surcharges on top of, all of the food and everything we're seeing right now. But CPI for all items up 1.3% in June. I mean, that's crazy. Yeah, the market's not going to like that. That's for sure. Okay, so let's kind of see. So Bitcoin's dumping, of course. I wouldn't be shocked whatsoever to see this thing probably, pull to the downside here. I would like to see some more info. So let's kind of go through this thing here. Let's see this. So the consumer price index for all urban consumers increased 1.3% in June on a seasonally adjusted basis after rising 1.0% in May. The U.S. Bureau of Labor Statistics reported today. Over the last 12 months, this all items index increased 9.1% before seasonal adjustment. The increase was broad-based, with the indexes for gasoline, shelter, and food being the largest contributors. The energy index rose 7.5% over the month and contributed nearly half of all the items increase, with the gasoline index rising 11.2% and the other major components index also rising. The food index rose 1.0% in June, as did the food and home index. So, to make it short, obviously the things that have been driving up inflation are continuing to drive up inflation. It started off with gasoline, that then does apply to food, and that does then apply to shelter. Now, some of you ask, and I saw that and I just got a message saying, why is food and shelter going to be affected by gas, right? Let's talk about the broad basis of how this works. Okay, so the majority of this started with gas when the Russia-Ukraine situation happened, right? We started to see a little bit of a supply cutoff there. A lot of the purchasing of oil was coming from Russia. So obviously once that stopped, that started to hurt the supply. Once you hurt supply with high demand, that obviously does affect prices. So prices go up. What happens after prices go up? Well, realistically, as prices then do go up, we are going to then see that affecting farms and processing plants and everything that uses machinery, right? Because think about it. If you're on a farm and you have cows and wheat, let's just make it simple, right? What are you going to need? You're going to need all of these big machines. You're going to need tractors. You're going to need your machines. You're going to need your processors. You're going to need everything that runs off of gas, right? It's going to need oil. It's going to need gas. These things aren't electric, okay? So what that means is that as we do go forward, the prices for those farmers, for those processing plants are going to dramatically increase, right? Because they're spending more money to produce. So as they're spending more money to produce, the prices that they charge then also are going to have to go up to cover this extra cost that they're seeing simply from gas. So as that happens, we then do see that being applied to restaurants. We see that being applied to stores. We see that being applied to your fresh markets and things of that nature, because as they're paying more from the farmers, they're then charging more to consumers, which are you and I. Now, as they're charging more to the consumers, you and I, what's happening is that the people who own these apartments, the people who are owning these buildings, the people who are owning these rent houses, obviously what's going to happen is that they're paying more to live, so they need to get paid more to live. So they're going to increase their own wage, which is them increasing rent costs and charges. And obviously that then affects the people who are also renting out these houses and apartments and things of that nature. So it's a huge, huge, huge trickle-down effect from not only just your gas, but then to your food, but then to your everyday consumer. And then that also then starts to get to apply to everyone else. Because there's people who are renting out things, who are renting out a house, renting out an apartment. If they own a business, what do you think they're going to do? They're going to charge more to pay for the extra rent. They're going to pay for charge more for the extra cost on their food and for the extra cost on gas. And it's this huge trickle down effect, but it all started with gas. And so as we are still seeing in June, we go back to, let's get this pulled up. As we did see again, June was consistently growing, WTI crude chart. As we did see in June, that start to, hit another peak here, right? As we did start to see this here happen, well, obviously that is then going to have a direct impact on the rest of the world. And, here we are, right? Seeing that again, let's see if we got any more tweets, but we can see that directly affect the CPI. So here we did, we got a chart and look where we are. Okay, this is what has caused June to be so much higher. Now, this isn't terrible, and that's the thing that I need people to remember, is that this is not horrible because it is what is expected. This is the reason why we did see earlier that the White House was trying to sugarcoat this thing, because they didn't want people to freak out when this news came out. But overall, with a 9.1% that does miss, and that miss very likely can contribute to, a dump of this nature. So looking at this thing broken down in this order, I actually am still very confident that this could be the peak of inflation for us. Earlier, I mentioned the fact that everything else was going down, right? The core CPI was going down and all of that good stuff over the last 24 days. Again, we have seen that this has been happening, right? And that's something you need to remind yourself of. We don't need this anymore. That we have been seeing gas prices come down. But as you can see, what happened? This huge 41% of this growth that we've seen has come from energy, and energy is on its way down now. Okay, that's what's important. The main driving factor to the upside is coming down. So personally, over the next month, I am going to be accumulating a little bit more consistently. I think that as we do go forward, we're finally going to, it would shock me if this isn't the peak, honestly, right? We of course see food at 10.4, we see all items at 9.1, but the fact that we're seeing energy at 41.6% being the main driving factor towards the upside, and the fact that that is now falling, it fits the narrative perfectly that this could very possibly be a peak. So something people do have to consider is that it's not going to be an immediate fall. Okay, and that's something that I want people to understand, is that what did we see? We saw food and we saw shelter were also contributing factors to the growth in the inflation and the CPI data that we're seeing now. It's not just so easy to up your rent and lower your rent, and up your rent and lower your rent, right? If you're going to get your rent increased to, say it was $1,300 and your landlord increases it to $1,400, that's not just going to automatically go away, right? The majority of them are going to keep them at the same raised price that they once were, and people are just going to get used to it, okay? So certain aspects of the economy and the ecosystem that we live in are not going to just immediately start falling down now that gas prices are falling down. What sucks is that the trickle-down effect from a raising gas price is very fast, but the issue is that once the gas prices start falling, that trickle-down effect slows down substantially. These people start getting greedy. The farmers, the industries, the processing plants, the producers, they start to see the amount that they can charge to their consumers, and so they're going to continue to do so until the fact that other people around them start to charge less, and then it forces their prices down as their demand goes down, right? So what we need to be on the lookout for at this point is, at what given point do we start to see this trickle-down effect generally and genuinely affecting the rest of the market? I do believe it should be soon, but some people are falling into a false narrative, in my opinion, saying that, oh, it's going to be immediate, that it's going to be something that just it's like boom, it's like that. We see inflation peak and the whole economy goes into an upswing, and I just don't see that happening. I think it's going to start to change the narrative, which is going to change the tide. We enter into a more, maybe sideways movement, maybe even a gradual uptrend as the economy does grow out of this inflation. But again, I don't think it's going to be immediate, because immediately doesn't change what's actually happening in the world at this point, okay? So overall, with this inflation data, it's not what I expected. It's a lot higher than I expected. I wasn't expecting 9.1%, if I'm being extremely honest. I'm looking for them to release the core CPI info here, but it doesn't seem as if they've done so yet. But overall, it's not necessarily the worst sign, and it's not the worst case scenario, in my opinion, due to the fact that the majority of this growth has been contributed to energy itself. Think about next month, when food is probably somewhere around the same, but we start to see energy coming down substantially. Likelihood is, as long as we don't see this huge uptick in crude oil prices, there's very likely going to be a transfer here, And so for that reason, the best thing to pay attention to over the next 20 days, 25 days, is going to be the crude oil prices. As long as this continues to the downside, I think we're finally going to see a shift in momentum, because the majority of the growth we've been seeing due to inflation and or the majority of inflation growth that we've been seeing has been due to energy. So again, what the White House says, White House CPI data, what they said earlier in terms of this being highly elevated in retrospect, when you compare it to what's actually happening in the world, sure, it might be a little bit elevated, as we mentioned, because of this fall here, but at the end of the day, the market's not going to like this no matter which way you cut this cake, and for that reason, I would expect capitulation over the next coming days. Okay, now what I'd be very interested in while we do this, I'm actually going to go ahead and I'm going to go back and I'm going to get bookmap pulled up. Give me 1 second. I'm going to pull up bookmap and I'm going to see where we have some key levels of liquidity right now. I don't believe the best thing to be doing at this point is just pure technical analysis, because you never know how the market's going to factor this in. We had 8.8 factored in where we were. We didn't have 9.1 factored in. So it may very well continue to the downside a little bit further. So what I'm going to do, I'm going to pull up bookmap real quick, and I'm going to see exactly where these levels of liquidity are and where we can expect bounces. Whenever we see these levels, we can expect bounces. It'll be a good place to go identify where you should be maybe considering stopping your, let's go ahead. Let's just get that up. Where you could very possibly be stopping your short trades. So let's get this. Boom. There we go. Bam. There we go. Okay. All right. Here we are. We're on bookmap. Of course, I do have the link to bookmap down below. This is the only platform I will use to look for key liquidity areas. It's loading at this point, but this is the only, again, this is literally the only platform that I will use in terms of liquidity, because it's the only one I trust. Okay. So let's kind of see this here. Let's go into the local cloud. Let's pull the last 24 hours. There we go. And let's get this pulled up. Okay. It's still loading a little bit here, but I want to see what's happening. I want to see what battle is happening right here. Let's pull up the last 24 as well. And then let's get this pulled up here. Okay. So looking at this thing, it seems as if 19,000 is not holding up very well, but about the 18, let's kind of go a little bit further here. While it's loading, it's locked. Give it 1 sec. So looking here, we can see, there we go. Boom, beautiful. Okay, so over the last couple hours, let's see how this thing has been looking. Okay. So in terms of liquidity, so what I'm looking for is, first I'm looking at the order book. Whenever I look at the order book, I look for, okay, at what given point are people setting buy orders? Because the buy orders are going to be key identifiers of when we can expect to see some support and when we can see, some bull stepping in. So what it looks like to me is that 18,880 is a very, very key level right now. Let's just kind of turn that down a bit, and then let's just go, let's go to a basic one, and then there we go. Okay, so what we can see is that 18,000, there's actually a lot of support here around 18,000. We can see 18,880 is holding up well. We can also see that this 18,800 level is holding up well. So I wouldn't be shocked if we do continuously bounce around 18,800. So what I'm going to do, I'm going to transfer back over to my Bitcoin chart. And I'm actually just going to draw a line. This is what I always do. These are going to be my key levels of liquidity. Okay, so we're going to come down here. We're going to give that key level number 1. Let's go back down here. Now let's just kind of go down a bit. Let's see what all we got. So of course, 18,000 is a key level of liquidity at about 492 Bitcoin sitting in the order book. What this means is that as this does trickle down here to these levels, these are buy orders. So these are the levels in which people have buy orders set in to where they are trying to buy Bitcoin. And as you can see, between 19,000 to 18,800, there is a significant amount of Bitcoin. I mean, this is 150 Bitcoin at 1900, 268 Bitcoin at 18.9, 230 at 18.8. So there are many bulls sitting in and buying in this $18,800 to $19,000 level. But as we can see, there is extremely strong resistance of people selling around 19.2 thousand to 19.3 thousand. So what I'm also going to do is apply that 19.2 to 19.3 at 9.1% interest here. Okay, or 9.1% inflation. Okay, so this is kind of the battle right now. We have key resistance sitting here between 19.2 and 19.3, with many bulls stepping in around 18.8. So the question becomes, which one of them is going to win the battle, right? Now, what we can see though is that if we lose 18.8, the amount of orders and the amount of buys and liquidity that goes in below this point drops substantially. What this usually means is that as we do lose 18.7 thousand, again, we are on Bitcoin's charts right now. As we do lose 18.7 thousand, there is a very, there's a pretty significant chance that we do see quite a fall to the downside. Now, I would like to look to see what happened the last time we fell below this level, because that should be pretty telling. So what you can see here is that historically, this key level of support that we are seeing is $18.8 thousand level has been holding up quite well. We can see at the beginning of July that this was also the level that the bulls stepped in last time, and that is going to be the reason that people are looking to step in at the same level with 18.8 thousand having so much liquidity, because they saw historically, oh, that's a good little pump there. We can see all the buy orders stepping in at 19,000, but what we can see is that at 18,800 people are 18,800 people see that if it loses this level, it loses a key level of support. And if we lose a key level of support, historically, look what's happened, right? Once we bounced off this level the first time, we came to the top side. But once we lost it, we capitulated straight down over the course of 5 hours, nearly 7%, okay? So that's a key identifier to go to show why 18.8 is so important right now. So we definitely need to be on, high alert with that one. We can see that the bulls are stepping in at that level again here. We are seeing such a strong wick to the downside. It seems as if the market's not reacting as bad as I expected to this. But again, it is important to see. So let's continuously look at this thing. I'd like to track it. So what we can see is that 19,000 is still sitting at around 415 buy orders right now, which is insane. It's kind of being eaten up right now as we are pulling down these sell orders and kind of opening up more buy orders here. SVP is still sitting pretty high, up towards these, these higher up 19,000 levels, which is interesting. Now, what I'd like to do is to say, well, if we lose 18,800, we probably can't expect any support up until about 18,000. It seems 18,000 to 17,600, 17,500, honestly. This little window is where we could expect to see even more falls to, okay? So if at any given point today we see 18.8 thousand get lost, I would go ahead and say that the next range that we would need to be on the lookout for is 18,800 and what was it, 17,600? Yeah, we can see here that there's a pretty strong amount of Bitcoin sitting here, about 200 Bitcoin in the order book, around 17.6 to 17.5. So I would actually just move it down to 17.5 just to be safe. But these would be my zones, okay? So as I do, play this thing, I like to play it in turn. If I'm going to trade, which I'm not trading this one because I don't know how the market's going to completely react to this. But what I will usually do is I will just use these as either buy zones or short orders, okay? So what I would say is that if we start just absolutely crashing straight through 18,800, taking on a short trade down towards 18,000 wouldn't be a terrible idea, honestly, towards that area. It's about a 4% loss there. It's not out of the ordinary, but as we can see, we have made that fall before. We have seen this 18,000 level hold as support as we did try to bounce our way out of this thing. And so for that reason, I definitely think there is some opportunity here. So what you need to be paying attention to based off of the current liquidity in the market is 18,800. That is a key level of support. If we do hold that, obviously, as we're trying to at this point, we very possibly could just kind of keep ranging, which would be the best case scenario here. But if we do lose 18.8K, there's really not much liquidity that I can see until we start interacting with 18,000 to 17.5. And that is definitely going to be the identifying factor of if we have put in a macro bottom or not. Now, another thing I want to give a look is that if we draw the Fibonacci's from the low here, this also does apply, so what we can see is that we have the bottom of our Fibonacci zone sitting right around $18.5 thousand. So yeah, definitely if, we start losing 18.8, 18.5, there's a very strong chance we revisit 18. And I honestly think we would go down to set the lower low. So definitely be paying extreme attention to how this plays out. Now, what we can see is that the stock market should be opening in about 10 minutes. And I'm curious to see how it will affect crypto. I think it shouldn't have a huge effect, but it should be interesting. This is a very interesting pattern here. But anyway, so let's go back on bookmap and let's kind of see what all is happening up here on Bitcoin. So This battle is beautiful, and this is great, guys. Honestly, I know it's not the best. Obviously, we did see CPI data sitting at 19 point or not 19, geez, 9.1%. But the fact that the bulls are stepping in so strongly here, man, we can see. I mean, it's currently 515 roughly, or no, even more at this point. We're sitting nearly at over 650 freaking Bitcoin in the order book of people accumulating here. We add in this 18,000 or $18,900 level, man, there's almost damn near 1,000 Bitcoin sitting here, people accumulating. It's so surprising, honestly, because I don't have enough local cloud history to go pull up what happened in the past. But realistically, guys, whenever we saw that last dump after the inflation report, it was literally just death, right? We saw that inflation report and it just straight capitulated straight down here. No bullish measures at all. No bulls were stepping in and no bulls were accumulating. Now, the question becomes, will the bulls win this battle or not? I don't really see why they should. I feel as if there's not enough reason for there to be bullish sentiment in the market at this current point, especially after seeing that. The only thing that I do start to think about is the fact that there is a possibility that, right, so understand this, that the market moves in advance of what's happening, okay? So let's kind of think about this. Maybe this is a good study, a little thought experiment here. So one thing we know is that the CPI has been consistently climbing, especially while we have been seeing gas prices increasing. So let's talk about last month. Well, last month when we got the release, we got a release based off of the May report. And we saw that inflation we missed and we were still consistently driving to the upside. As we saw that release, oil prices were also still consistently driving to the upside. And so what we could see is that while inflation was growing, the cause of inflation's massive growth, which is oil, was also growing, leaving us to expect even more growth into the next month. And we couldn't visualize when a peak could be, right? If you envision, let's go ahead and just do this, right? I don't think I can draw a line on this chart, but say if everything past this point where the yellow crosshair is, this little line right here, say if this is when we got the release for, or let's even go here. Let's go back into June. We're here, right? We get the June release of May's inflation data. And when we get the June release of May's inflation data, we see oil prices have caused us to miss and inflation is growing substantially. And we're still nearly peaking on oil prices. One could only assume that the market is factoring that in to say that we probably aren't nowhere near a top at this point because gas prices are still increasing. This time around, though, we can look at history and we can look at the last 30 days and say, well, oil prices are still consistently dropping. So maybe the narrative that we are seeing oil prices falling in that next months could very possibly be a lot better than the last couple months. Maybe the effect on the market isn't as substantial as it once was, especially like last time, last month when we saw this huge capitulation down towards this, $17,000 area. That is very interesting to think about, right? Usually the market moves in advance of what's happening. It factors in the future as much as it possibly can based off of given information. Well, if the given information is that we possibly could be seeing growth, maybe that's the reason why we are seeing so many bulls stepping in here. I'm not quite sure, but with 600 Bitcoin in the order book and $19,000, that's a little bit out of the ordinary for what I've seen on CPI data release. So it's interesting to see that we are getting the bull stepping in here. And I guess it is due simply to the fact that we have seen a bit of people factoring in the fact that this could possibly be the peak of inflation, maybe some type of blow off top. Now, I'm not sure, of course there is always just, that is always speculation and just assumption, but there has to be some type of reason as to why people are still accumulating at these levels. Now, again, I'm not quite sure that this is going to hold. I don't really see why, we wouldn't start to continue to the downside, even to come retest some of these lower levels. So the biggest thing to pay attention to is this battle between 19,000 and 18.8 thousand. If this battle is lost and we capitulate below 18.8, again, it does seem as if the next point of concern would be around this 18 to 17.5 thousand area. And then below that, obviously, there's not really much support until the next key level of support will be 16,000 and, every 500, below that. So, very interesting to say the least. What I would like to do is I would like to jump on, I'm going to clear this just for now. I'm going to jump on the hourlies and I'm going to say what's going on with our RSIs. And how is this fall looking? So I have been kind of warning the last couple of days about this, the fact that we were seeing this consistent downtrend here on the RSI or on the price itself, but I do see that we were going into a consistent uptrend on the RSI. That's always a bad sign. Now, I wasn't really too concerned about this due to the fact that we were seeing inflation data coming out. I was like, inflation data is going to negate this one way or another. It's either going to confirm it or completely negate it. So this RSI isn't the reason that we did see a crash, but now looking at it, it definitely does seem as if it played a little bit of a fact or a part in it at least. So we can see here that the hourly RSI is correcting to the downside here. It's not falling as hard as I would expect it to, which is definitely interesting. We can see the hourly MACD turning very bearish very fast. So I wouldn't be surprised to see a cross there. I'm sure on the shorter time frames it has crossed. Yep, there we can see that. And we were overextended with a full push to the downside on a 30-minute RSI as well. Now, I don't think that the 1 day is going to have shown any effect by this because it has already gradually been falling. I think a close at this level is just going to further push this to the downside. And the last time we, of course, did get one of these bearish crosses was at the last CPI data release right here. Boom, we saw that cross, and of course, oh man, you missed it. So it came out. So the CPI data was at 9.1%. Okay, it was at 9.1%, missing analyst expectations by 0.3%. So of course we did see we did see this capitulation here after the last CPI data release on the bearish MACD cross on the dailies. It does seem as if we could be getting a similar cross happening here. I would love to see what the daily. So we did lose the 20 simple moving average a few days ago. I would actually like to see what's happening over on the 1 hour. The 1 hour is extended, and we did also lose. We recaptured the 20 SMA, but we lost it on the hourlies as well. All bullish signs, of course, due to the news that we did see. This isn't just happening just to happen. Now, what's interesting, this is actually very interesting. This is actually very interesting, and I question this. So why did Bitcoin dominance just capitulate as we did see this news break? Now, if you don't know what Bitcoin dominance is, to make this simple, if the total crypto market cap was 100 and Bitcoin's market cap was 60, Bitcoin dominance would be 60%. So what this is the ratio of the total market cap that is held by Bitcoin. When we see altcoins outperforming Bitcoin, Bitcoin dominance goes down. When we see Bitcoin outperforming altcoins, Bitcoin dominance goes up. Now, what's interesting here is that as this news did release, we saw Bitcoin dominance crashing, which is very, very, very weird. The only assumption that I can make is looking at ETH is down negative. I mean, Bitcoin's obviously leading the charge, and I think that's due to the fact that people are used to Bitcoin kind of leading these dances. We will usually see Bitcoin fall and then alts follow. But more often than not, when we get a capitulative event, we will usually see Bitcoin dominance correct to the top side. Right, we will usually see things of like, I don't think it's going to show it on my hourly charts. Let's go to the 4 hour. We will usually see things like this happen, where we see these huge spikes in Bitcoin dominance. So it's interesting to see that Bitcoin dominance is still continuing to the downside. Now, one thing to consider is obviously that I do believe stablecoin is factored in. So I guess there is that there, right? I don't have the chart that takes out stablecoins out of Bitcoin dominance. I need to go find that. But maybe people are moving it simply from Bitcoin over to stablecoins instead of moving it from Bitcoin into cash. So for that reason, we very possibly could be seeing people expecting some type of short-term capitulative event in which the price does fall. So they keep their money in the stablecoins to then reinvest it back into the market as we do stablecoin dominance. What's the chart? What's the chart on stablecoins? I actually don't have that one. Nah, if any of you know the chart on stablecoin, but that does make sense, right? So that's a good sign. So whenever you think about Bitcoin dominance falling, that's interesting. So if the majority of people are going into stablecoins right now, I'm trying to think about that, right? So in my opinion, if we're seeing stablecoin dominance growing, but we're seeing Bitcoin dominance falling, that's actually a bullish sign. And I think that also ties into what we are seeing over here on bookmap with the amount of bulls who are stepping in around this $19,000 to $18.8 thousand area. I think there's a lot more bullish sentiment in the market than people expected. Now, the reason I say that, think about this. With stablecoins going under, USDT.D and USDC.D. Okay, thank you. Let me get those pulled up. I'd love to see that. Let's see. USDT.D. Let's get this. That should be in, there we go. And then let's look at USDC.D as well. That's an interesting point. I should have looked at this earlier. So yeah, there it is. Beautiful. So this is a great sign. In my opinion, this is a great sign. Now, obviously there is resistance here. Curious to see if we break that. I'm assuming it's the same on USDT.D. So what this is, what we're looking at is the dominance of stable coins. The amount of the total, the amount of people, make it simple, going into our stable coins here. And we can see we are retesting highs. So this is actually bullish in my opinion. That's another bullish factor of what's going on in the crypto space, is that not only are we seeing, again, as we saw, bulls stepping in with loads of orders sitting around this $19,000 to $18,800 level, but we're also seeing our stablecoin dominance increasing dramatically. And as that happens, Bitcoin dominance is going down, but that tells me that people are a little bit more bullish than what's expected. Now, the reason I say that is because think about this. If we were going to see people exiting the space, they're like, screw this, I'm done. Bitcoin's going to 3K, 2K, 1K, 5K, whatever. There is no hope left for crypto. Inflation's just rising and people are panicking. What they're going to do is they're going to sell it. Okay. That's what people do for the most part, right? The retails, the noobs, they're going to go on Coinbase. They're going to go to Bitcoin. They're going to go to sell. That's what they do. They're not thinking, well, I think this could be a short-term capitulative event in which the prices of everything just kind of drop to the downside for the time being. We find a bit of a bottom, and then we start to see this data that's being released with, oil prices falling, that we very likely could see a peak soon. And so for that reason, I think that we could start to find a bottom relatively soon. For that reason, I'm going to keep everything in a stable coin so that soon thereafter, I can also transfer that back into my Bitcoin and Ethereum positions. When I see stablecoin dominance going up, that is more often than not people who are getting out for the short term. And that's okay. I don't blame them. If you're going to sell it in the short term, sell it for the short term. If you think it's going to go to 15K and you want to sell it, sell it. I'm not going to tell you what to do. But more often than not, when people are exiting the space and not coming back, they're not going to hold it in stablecoin, right? So especially when shit happening like all these DPEGs, right? We're seeing USDT dominance still going up. And who trusts who really trusts Tether? If we're going to be honest here, right? So more often than not, when we are seeing stablecoin dominance going up in this nature, that is a beautiful, beautiful, beautiful thing to say that we very possibly could be in a position to see this macro bottom coming in soon. And I think that's very realistic to say because people are still in this space. Over the last 4 hours, people are still accumulating their stablecoin. And look at this. Look at the macro. Look at the macro, guys. What we got? It's been ridiculous. The amount of people who've been accumulating stablecoin over the last 7-8 months is amazing. People are willing to spend it on crypto. They're just not willing to spend it yet. That's a beautiful thing to think about. So Bitcoin is currently sitting at 19.2. Looking at our liquidity, we can see that liquidity is starting to get a little bit spread here. What that means is that it's starting to get a little bit just spread out amongst different buy zones. But for the most part, the bulls are still stepping in. It's insane. 18.8 is not as relevant anymore, but a little bit of relevancy. At 157 stepping in. 157. Oh, there we go. Yeah, that dropped substantially. Okay. This is interesting, man. I almost feel like even if we do see a capitulation, we see it crash, I almost feel like the market is much, much, much more bullish and waiting to step in than I even anticipated. Because again, people are holding money on the sidelines, right? And they're still consistently just moving into the sidelines. They're not exiting the space. And that's always, always, always a good thing. Now, people could say, well, USDT dominance has been consistently going up. But whenever you look at the slope, right, it's all about slopes. You look at the slope here, right? Let's just go ahead and draw a general trend line. This was the slope we were following up until April. And then once we hit April, we literally went straight up, okay? And so as we can see, the amount of people accumulating on our stable coins is much higher. And these are people who are going to wait on the sidelines. And these are people who are even using some of it now, right? So it's very interesting to see that. It's definitely interesting to see that the bulls are still stepping in. And I kind of like to see it. I'd love to see what's going on Twitter right now. Let's go over there and let's kind of see what else is going on. See if the BLS has released anything else. No. Let's just go look at CPI data. See if anyone's talking about anything relevant here. Yeah, exactly. Order books can change at any moment. Yeah, absolutely. Absolutely. It's not necessarily that this is the law. I'm not saying that this is law, right? And, yeah, let's get some more likes on this thing. Let's get up to 100 likes. But I'm not saying that this is the law of the land right now. I'm more just saying that although we can lose this. We can lose 19.2 thousand. We can lose 18.9 thousand. We could just absolutely capitulate before you know it, right? It's more of the fact that in moments like these, the bulls are still stepping in is a bullish sign that even if we do capitulate, that a bottom should be coming sooner than later. Okay, that's more of my thought process on that. But let's kind of check out crypto Twitter. Let's see what's all going on here. Yeah, accuracy here. Let's just go out to our homepage. Let's see what all is going on. Give that a little retweet. Yeah. Yeah, nothing really too interesting going on Twitter. I mean, people are kind of just taking this as what is that thing? Oh, gross. Yeah, nothing too substantial here. The dumping has started. Decentralized not tied to any country. The so-called crypto decentralized is not tied to any country, but for some reason it acts according to what the Fed says. I'm bored of crypto. Now, I see that a lot. And let me touch on that for a sec. So, a lot of people are talking about the idea that well, if Bitcoin is going to be a kind of a, what's it called? If Bitcoin is going to be a hedge against inflation, if inflation's going up, why is Bitcoin going down? It's not at that point yet. We're not seeing mass adoption. We're not seeing any of the things, any of the structural establishments that we need just yet for that to be a truthity, right? Or a factuality. And so what you have to understand is that at a current time where the prices of everything are increasing and you have to pay with everything in cash for the most part, you're not paying your rent in Bitcoin for the most part. One thing you have to understand is that people are going to need more cash as their cash decreases in value. So they're going to be more willing to take money out of investments because people look at crypto as an investment at this point, which it is at this point. They're going to take their money out of their investments to have more cash to use that cash in their everyday life. So right now, no, it's not a hedge against inflation. It's not that the core values of cryptos are wrong. It's that they're not in place yet. And it tells me that we're a little bit early. It tells me we're a little bit early. So let's jump back into the order books. Again, we're seeing a lot. We're going to wrap this thing up in here in about 9 minutes, but we can see that, the amount of people stepping in towards this low 19 to high $18,000 level is amazing. I'd love to go see if anything else has changed. 18,000 sitting heavy at 478. A lot of people are expecting that level. We're also seeing 17.5 stepping in. I do believe that was right around that low we put in earlier in the month. So as you can see, the amount of Bitcoin we have right now, the majority of it is sitting right around this $19,000 to $18,800 level. And I think that if we lose that, we definitely need to prepare for mass capitulation. I think that would be what follows, right? So I think, again, remember, if we do start to lose, let me see if I can rewind all the way back. There we go. If we do start to come back down below this 19.1 to $18,800 level, if we lose this, guys, we're very likely going to capitulate to 18,000, and I will very possibly take on a short trade if that does happen, right? Now, I know I talk a lot about short trades. Let me kind of pull this up here. I want to give you guys a little bit of in-depth here. So whenever I short trade, what bookmap are you using? I'm using the bookmap in my description. Just go check out the description, go down a little bit, and I'm on BTC-USD. So this is a look at my Patreon. This is not a Patreon shill. This is literally me just talking about what type of short trades I'm doing, okay? So I took on a short trade on Solana yesterday. You guys know in yesterday's video, I told you, I said, hey, there is a pretty good shot that we do see Solana start crashing. If we lose the $35 level, I think we're going to crash towards $32 to $33. I think there's a good trade to take on there. So what I went ahead and did, shout out to Rupak with the donations. That's hodl, hodl, hodl. That's what we're doing. Thank you, my friend. But as you can see, we did open up that short trade. Entry price at $34.50, stop loss at $35.50. My take profit level was $33 on 2.5x leverage. So we opened this up at about like 5 o'clock yesterday. Now, what ended up happening, if we go back there, I'd like to go to Solana really quickly just to show you the type of short trades I've been doing because I've not been doing many. But if we go back to about 5 o'clock yesterday, what we can see is that we lost. So it was right when we lost 34.50. It was right here. So on this little close, boom, we broke to the downside, and I took on a short trade right at 34.50, and I set my take profit level estimation right around $33. Boom. So what I was doing is saying, well, realistically, we lost this macro triangle that we had been in, and so for that reason, I'm gonna just take on a short trade back down to the next key level of support. And as we could see, the next key level of support was around $33. So I was like, yeah, well, I'd like to take profits around that level. And so obviously I went ahead and took on a short trade. Now, when I take on these short trades, I don't do huge trades. Again, I was on 2.5x leverage. I don't think taking on a lot of leverage during a time like this is a good idea, honestly, even shorting, because at any given point we could bounce 30-40%. But I took that on. It was up about 5.25%, literally within the span of 25 minutes. The hourly RSI started to turn. It started to give us signs of a bounce, and obviously right after I closed it around 30, I closed it early. I closed it at 33.75. I mean, right around the time that I closed it, right around some of these lower levels, boom, we saw this huge bounce back up to retest the top side here. Now, if I would have held this position, we obviously would have been up more, but I don't care about that. I'm just looking to lock in profits. But as you can see here, I mean, I take on little short trades. I don't do a lot of them. It's not something that I think is a necessary demon. You know, it's like shorting and longing on leverage. It's a demon, but it's not a necessary demon. So it's kind of like extra cash. It's something that I've honestly been doing quite a bit. I told this to the Patreon, but with today's successful short trades, we are now 7 for 7 over the last 8 weeks with total gains of 41.55%. So in the last 8 weeks, we went 7 for 7 again, up almost 50% on the trading portfolio. But that just goes to show that in times like these, I'm not doing a lot of leveraging. I'm doing small leverage trades. Okay. And so for me personally, if I was looking to go long on this thing, what I would need to see, let's just go back to this. What I would need to see if I'm going to take on a short trade, I mean, I would need to see a pretty clear closing. I would like to see a pretty clear closing below 18.8 thousand. I think if we lose 18.8 thousand on a daily close, I may take on a bit of a short trade towards $18,000, obviously, and that could look like some type of fall of 4%. 2.5x gain, there could be, what's the math on that? Around 10%, around a 10% push there. I usually do 2.5x leverage. So for that reason, I would need to be seeing a daily close at a point lower than we've seen any daily closes before to really see any true confirmation that we are going to push towards these lower levels again. And looking at liquidity, again, that does kind of back that up. Seeing that after 18.8 thousand, we lose a lot of liquidity up until about 18.4 to 18.5K. So we can see the battle happening. It seems like the bears are actually starting to gather a little bit of control with the resistance sitting around 19.2 thousand. About 200 in the sell books with around 220 in the order books at 19.1. So pay very close attention to the battle that happens here. But let's kind of go forward and let's talk a little bit about what's going on with, man, this thing's all janky. Here we go. There we go. Let's take a little bit of a look at what's going on some of our altcoins, because I think they're also going to have a little bit of a similar effect. So what I'm going to do is I'm going to go Ethereum USD. Let's see if I can find this one. And we're going to look to see what's going on here. Will Bitcoin drop when the market opens? It definitely might. I don't really see a necessary reason why it needs to, but it definitely could. All right, let's see this. Let me load some local cloud history. Let's do 24 hours. That'll be fine. I forgot. I realized you guys weren't looking at it. There we go. So yeah, again, Bitcoin, strong battle happening here. Let's look at Ethereum though. Let's see what's going on with this thing. It will load in 1 sec. So what I'm just doing is I'm just looking at liquidity. I'm on bookmap. Bookmap, the link is in the description below. It does help me out if you use it to sign up. But what this gives us is a very clear representation of where people are buying and where they're selling and where we see key levels of liquidity. It's the most absolutely amazing tool to figure out if people are bullish or not, right? That's my favorite thing to use during capitulative times like these. Where can we expect some support? Let's get another 12-hour pulled up. So currently looking at Ethereum, we can see that support above 1,000 is high. Okay, so we have 3,000 each sitting at 1,000. We have 4,000 sitting at 1010. We have 5,000 sitting at 1020. With not that much sell pressure coming in right now, around about 6,000 between 1050 and 1030. So as you can see, although there is a lot of sell pressure, we are matching the energy and the bulls are stepping in. Here we go. There we go. Okay. So what we can see is that at this point, the bulls are still stepping in, and this is a beautiful sign, honestly. So with the fact that we are seeing about roughly call it 12,000 ETH sitting on the order book between 1030 and 1,000, I think there is a very specific narrative playing out here that people are still bullish, right? You can see we had this beautiful little wick here where the bulls stepped in and pushed the prices back up. But this also goes to show that if ETH loses this battle at 1,000, that's likely going to run hand in hand with Bitcoin losing this battle at 19,000. And that is when the bad shit's going to start. Okay, we look at ETH, we can go ahead and just mark that down just for, this is also a short trade I took on. I told people if you're going to be going short, look for 1055 to break. If it does break, look to take around 1,000. And obviously that short trade is up about 2.5%, 2.5x leverage. That's sitting roughly around 7% in gains. But I don't need this anymore. But what we can see is that this is the level, right? $1,000, the key psychological level. Previous point of support, obviously got a strong bounce there. We're looking to see a strong bounce here. That if we do lose this level, we can expect capitulation to follow soon thereafter. Looking at ETH specifically, I think that there is a substantial chance that if we do lose 1,000, we can we will very likely see some ugliness enter the market. It looks like the 900 to 880 level isn't out of question. And when I do pair that up with previous falls, 900 to 880, as you can see, look how beautiful this is. This is why I love bookmap. This is the level we're seeing the next level of liquidity at. People are looking to accumulate at this previous wick low, right? One thing I know is that whenever we see wick lows on daily charts, there's a strong chance we might revisit those wick lows. And so for that reason, you can see here that bookmap is saying that if we lose this key level of support again, there's a strong substantiality that we do start to come back down towards this previous wick low around 880, because again, we can see people putting in orders of around, that's almost another 9. If we count 3,000, roughly 12,000 ETH sitting between 900 and 850. So again, ETH is another one that I think if we lose this key level of support at this given point, when the market opens or something of that nature, don't be surprised whatsoever to see the clearing of this gap and we start to see a push down towards, what could be 10 to 14%. That could also be a decent short trade. I haven't been shorting ETH recently. I don't even like shorting any alts. I know I shorted Solana yesterday, but that was an obvious trade for me. I really just short Bitcoin because it's the least volatile, and I don't like using leverage on short trades at the bottom of a market. That's just a terrible idea. But again, that could be a decent short trade idea here, going in around this, if we lose around $1,000, because that does negate all of this bullish liquidity that we are seeing at this given point. And that's kind of a key sign or a key identifier that the bulls are losing this battle. So looking at this, what is that program showing liquidation levels? This is bookmap. If you do go on, I'm pretty sure it's in my description. One sec. So if you go look at the second link in my description, it says to get access to the best charting tools in the game, such as liquidity, etc. Go to bookmap.com, and my affiliate link is applied there. So as you can see, we're on bookmap. So anyway, again, this is going to be the point in which I would expect us to see. Don't mind this Minecraft thing, by the way. If anyone wants to play Minecraft, let me know. But we can see here that 1,000 is the point. So $1,000 on Ethereum, and we can see that about 19.9 to 18.800 is also the key levels of support and liquidity for Ethereum right now as well. So those are the two key levels to pay attention to. Due to this, of course, we can see that other things such as ADA are also falling. ADA did lose this key level of support. So what we can see, no problem. What we can see is that ADA had been sitting at this key level around, what's this roughly? 0.44, and it had been wicking off this low multiple times over and over and over. I can run through that real quick. I haven't really changed up much. So obviously I just have the show data tooltip on. This is my configure visible component settings. If you want to take a look at that, I have these two on. These are my current just small settings in terms of like the visibility and stuff like that. I don't have any of this on right now. Color settings look like this, and just screenshot this stuff so I don't have to go through all of it. I'm currently sitting on the blue to red gradient ratio with it sitting on the heat map dimming right around 25%. But anyway, so ADA did go ahead and lose this key level of support. Now, I told people, this is a decent shorting point. I said that if we lose that, the short trade that I mentioned, I didn't mean to do that. I said the short trade that I mentioned was going from key level to key level. So if we lost 44, shorting towards 42. If you did take on that short trade, obviously you went up about 4 to 5%, which is beautiful here. But realistically, looking at ADA now, I do think that 38 is now in the picture. It does seem as if that is the next key point of support, especially if we do Fibonacci's. One thing we can see here, boom, boom, is that we did lose the 0.618 and the 786. This whole key zone is lost. When we do that, we will usually fall down to this previous point of support. So it seems as if ADA is very likely to fall to 385. I would be shocked if it doesn't. It might bounce and retest, but it seems as if this is going to happen. And if we do go over, I may be able to pull up the ADA chart. I don't know if it's good on here or not. I haven't used it. No data retrieved. Okay, so we do have it. So if we do go ahead and zoom out, we can look to see around 38 if there's liquidity. And as you can see, this is one of our bigger bumps. We're sitting at about 100 and quick math. 150, nope, about a lot. Let's just call it a lot, okay? So we're sitting here on 0.38 with a significant amount of ADA just sitting there in the order book ready. Obviously, if we do start to lose this 0.4 to 0.45 level, that is going to send us down to these lower 0.39, 0.38s. So at this given point, it is another one of those deciding factor moments where it's like, are we going to follow the rest of the market? Are we going to lose 40 cents? If we lose 40 cents, do expect it to hit 38. This isn't a short trade I would be too against, honestly. From this point forward down to 0.38, that's about a fall of 5%, and I think that's a decent pull there if you're looking to see a bit of a short-term trade. But with the amount of bulls stepping in, especially for Bitcoin and ETH right now, I'm not going to go ahead and bet that we're going to see this huge crash to like 30 cents or anything like that. I'm more willing to bet that we're going to see, this some of these mid 30s 35-cent levels, okay? That's kind of still my overall opinion there. So overall, ADA's doing decently. Solana sitting at 32. I told you guys with Solana that the best way to go about this right now is to go support level to support level. Obviously, again, we did do that short trade over in the Patreon, in which we did bring in, again, 5.25% gain in 25 minutes. That was on a $3,000 trade, so I made roughly about $160 in the span of 25 minutes, which was great. But what we can see is that Solana is now retesting this $32.7 to $30 level. If it does bounce off this zone, strong chance we do start to get continuation to the upside. But there is a very strong possibility that if we lose 30.9, we do start to aim towards, this. I wouldn't be shocked to see 26 points, this 27 cent or $27 level. I think this is a very strong and fair possibility. The rest of the market would be capitulating quite hard, but it's not out the question to see a push towards 27 for Solana. So definitely do pay attention that if we lose 30.9, we will very likely see a push towards this $25 to $27 level. That could be another beautiful short trade similar to the one we did yesterday. And yeah, those are the main ones. The last one I'm going to go over is Matic. Let's see what's going on over here. Has the stream been a little bit blurry? Oh no, we're good. Okay, we're good. Okay. Looking at Matic, of course, Matic did get this strong bounce off of 0.74. What I told people was make it easy. Make it easy. If we start to come up and we clear this 0.74 zone, we get over this box right here, boom, we're looking good. This is a key point of significance. We can see the double top that we put in here. And so realistically, if we do lose, support below 46 cents, we're probably going to start to, oh, this guy. I like this guy. Blockchain J. He's my biggest fan. Blockchain J is my biggest fan. He got notifications on and he comments on all my videos. I love this guy. So looking at look at this guy. I love him. Shout out to Blockchain J. Go subscribe to his channel. But looking at Matic again, the biggest thing that I would look for is the loss of 46 cents. If we lose 46 cents, obviously key level of support lost. The back test would have failed here. I think there's substantial chance we do start to pull to the downside. We look at the fibs. Another thing that I would say is that, maybe a possible pull from 46 down to this 40 levels. It doesn't seem out of the question for me. Now, we did get some bullish liquidity here previously. Let's do, I'd like to see if I have okay, whatever. Looking here, I think that we did see the bull step in right here clearly. So if we do obviously start to see the daily closes below 46 cents, it wouldn't surprise me at all to see kind of a repeat of what happened here where we see a strong pull towards 40 cents. Okay, so Matic, it's just another one to pay attention to here. This is obviously a pull of about 13.2% roughly. But again, Matic is holding up quite well. I'm not actually too upset with what Matic's been doing. It's been going sideways for the last couple of days, and I think the fact that we were seeing some possible reversal patterns are some early indications that Matic is in a situation where it could be bottoming out soon, especially as we are trying to hold above this previous point of support here. Okay, so we ran into resistance back here. We're looking to hold some support here. There's always that, the possibility that we do see this level kind of holding while we do go into some type of consolidationary / slowed down downtrend. Okay, so Matic's actually looking pretty good, but personally, I wouldn't be doing mass accumulation until we cleared 74 cents and get back above this key level of rejection right here. Okay, so just a quick little look on Bitcoin dominance. What's this thing doing still? Bitcoin dominance is still going sideways. I want to go see the stablecoin dominance is still trending upwards. We can see here that people, we were seeing a little bit of a rejection off of these tops, these highs that we saw previously, but it does seem as if stablecoin dominance is still climbing to the upside. That is something we want to see. We want to see people still having faith in crypto. How do they have faith in crypto? They get rid of their, if they're going to sell, I'd rather them sell it for a stable coin than them sell it for cash and exit the space completely. The whole goal here is mass adoption and keeping people within crypto for the long run, right? Not the goal here on my channel. You can do what you want. I'm talking about in general. We want to see people still remaining confident in crypto, and the only way in which we can do so realistically is by them trusting stablecoins, trusting USDC. I'm not going to say USDT because I don't trust it my damn self, but trusting that this space will support them over time and that they can keep it in stablecoin and be safe. And so in a time where the market's falling and things are getting ugly, obviously the fact that they are still trusting stablecoin and the fact that they are still going into it is a beautiful, beautiful, beautiful sign. Okay, I love to see that. USDC is it's crazy that USDT is up over USDC because, man, the shit that goes on at USDT is so weird. Overall, let's give it one more look at bookmap before we do go ahead and close off the stream. We can see here the bulls are still in. 18.8 has now become another level of significance. Failing, we obviously did lose this battle here, but we can see the significance of this battle at 19.2. We saw a little bit of a retest, right? So we lost it, we wicked down, we came back up, we retest, put in this resistance, and now we're pulling to the downside here. So be on the lookout for 18.8 to 19,000 to really drive home on, I'm also going to go over the stock market open, which should be in 2 minutes. So looking at this thing, the battle is still between 19 and 18.8. On ETH, I'm sure we're testing the lower 1,000 now. 1,020, the battle is still at 1,000 with all of this key level of liquidity here. ADA's obviously should be around 40 cents. Yep, right around 40 cents as well. So 40 cents for ADA, 1,000 for ETH, and 19,000 for Bitcoin. Those are your key levels to be paying the most amount of attention to. You know what? I'm not even going to exit this. Let's stay live for the stock market open. I have nothing to do today anyway. At all, really, just a little chill day. I'm not feeling the best. I'm honestly a little sick, but let's see what goes on here. Now, interestingly enough, we did lose. This was actually way off. Interestingly enough, though, we did lose this key level of support. We honestly lost this, came back, failed the retest, and then continued to the downside. So let's talk about technicalities here. I don't like technical breakdown targets right now in a market that's being driven by macro factors, but we can do it anyway. So obviously we did see the bit of a ascending wedge here. Now, off of ascending wedges for Bitcoin, what I've noticed is that these are my favorite patterns to trade, by the way. When we're in a downtrend, boom. When we're in a downtrend, an ascending wedge is my favorite pattern to trade because the breakdown targets are very easy to find, okay? So what you do is whenever you have a structure of this nature, what you do is you're going to find your breakdown targets from the loss of the key level of support or the support line here. Boom. Now, as we do lose this key level, right, what you do is you're going to take the previous points in which we found support on this line, and those become your breakdown targets. It's honestly very easy. That's my favorite trade. These are always my favorite trades. So what I do is I go ahead, I press Alt-H on the previous times that we hit this support level. So I'll go boom here, and I'll go boom here. Now these are, nope, not that way. Boom, there we go. Now these are your breakdown targets. Now it's no surprise that they do line up perfectly with our liquidity that we're seeing over on bookmap, again, as we could see back here, around this 18.8 to 18.6 level now. But what you're going to go ahead and say is that when you lose this, you lose a support level more often than not, you will come down to your previous point of support, which is currently sitting between 18.6 and 18.8. Of course, an area of confluence here. So you would anticipate that this is the point in which you would start to maybe see a bounce or some type of sideways movement. Then if you lose that key level, you're then going to look for your next point of support, which is generally going to be your first touch on the support line, at this point being $17.6 thousand. So if I'm going to short Bitcoin, obviously I'm going to be shorting from support level to support level. So like I said, if we start getting closes below 18.8, 18.7, and we're just losing this previous point of support, obviously there is such a strong driving factor towards this $17,000 level that I would take on a short trade to maybe even just 18,000, right? In which we could look at some type of fall of 3% on 2.5x leverage, looking anywhere from 7 to 10% in gains there. Okay, so in terms of technical analysis, it does seem as if we do have some confluence. That 18.7, 18.6, 18.8, this little zone here is the most important. We lose that, shit is going to get ugly. Okay, now let's take a look at what's going on in the stock market right now. VOO, let's just do Yahoo Finance. Let's see how this thing's opened up today. Down 1.3%. No surprise there, really. Yeah, so stock market is crashing as well. It seems as if the stock market crash has had a little bit of an effect on the price of Bitcoin. If we go to the minutes, I would assume that this pull has happened because of that. It opened up about 2 minutes ago. Let's see. Yeah, over the last about 5 minutes, going into the open, we did see this capitulation here. Boom. On the minutes, actually, looking at this, we did kind of put in a bit of a we put in a bit of this reversal pattern here as we did break to the downside there. That's just minor shit that doesn't really matter. But it seems like $18.9 thousand. This is it. This is kind of it. We're at it. If we break down below it, we come down, we put in this lower low, we're going to test the key zone of liquidity around 18.8 thousand, as we can clearly see here, still holding in. And if we lose 18.8, I mean, that's the point where I would start to get a little bit like, okay, shit's about to get a little bit ugly. Okay. Again, VOO is down about 344. It's not necessarily surprising. I do believe earnings are this week. Stock market earnings this week. Can you show Bitcoin volume at price indicator? Yep. Let me get that pulled up. What's the dang on? There was one that I like to look at. Volume weighted average price. There we go. No, this isn't it. There's a certain indicator that kind of summarized it a little bit. I cannot think of the name. It started with a V. I'm having a little bit of a brain fart right here. It's not this one. I'm trying to think of the name of this dang on thing. Hold on. I'll get it in a second. We'll look in a minute. I want to look at these stocks real quick. There's a certain indicator on TradingView, and it gave a beautiful volume at price chart. Name of it. It's blanking me right now. Do we have any, let's see. Trying to think what earnings are coming out this week. So let's see here. It's always about earnings. I appreciate it, Mark. The expectation has been for a year now that it's not about the trailing earnings, it's about the future economic expectations, of course. What are we seeing from earnings this week? The season kicks off. Here we go. VPVR, that's the one. Yeah, it's the one. Vapor. Yep. That's what I called it. The season kicks off with earnings from PepsiCo and Delta Airlines on Tuesday and Wednesday, following by bank stops. Okay, so it's gonna be pretty interesting. So, although we are seeing the stock market falling, I don't want to be that guy who just kind of makes up excuses, but it does seem as if we are also going into earnings season, so all moves are going to be more dramatic than before, right? So if we're going to see the market fall a little bit, it's going to fall a lot of bit because we have earnings season coming up, bad inflation, people are expecting bad earnings, blah, blah, blah. They're worried, of course. That is going to kind of dramatize, I think that's a word, what we see in the stock market. So stock market currently down about 1.23%. I would like to see what the NASDAQ is doing. NASDAQ's now 1.8%. Of course, that is going to be a little bit more influenced by your tech stocks. So not necessarily a surprise here, but that is having a dramatic effect on the market. Bitcoin's still holding this 19,000 level, kind of bouncing. And, we of course did mention that there could be a bounce here, but not too convinced that's going to sit. There we go. There's a specific one on here. There's a certain one that someone put on here, and I wanted to use it, but I cannot find it. We'll just do visible range volume profile. That's cool. All right, this one works. This isn't the exact one I was looking for. There was like it's like a smaller one, a less known one, but it was a lot better because it had numbers on it. But this one will work. Whatever. Let's do like 200, and then wait, no. One sec. There we go. Okay, let's go out to the dailies. Let's see what's going on here. Yeah, I mean, let's go. Your voice is filled with opium. My voice is filled with rationality in a time where everyone's freaking out about shit we already knew was coming. So VPVR, yeah, this is fun. This is a fun one to think about. But realistically, it's also amazing to kind of see how this is playing out. So what we can see is that VPVR is highlighting 18.8K. It looks like this is another one of our peaks. If we go, let's just kind of zoom in a little bit more. It's kind of the final point. I want to go to 4 hours. Hold on. It sucks because on my stream right now, I don't want to get... Okay, whatever. We'll be good. Let's do this. Boom. There we go. So to kind of compare it to what we saw historically, it seems as if this is kind of like we're rolling to the bottom of the hill, you know? Whenever we start to see these peaks getting clear, these are the levels where we can expect support, right? These are the levels where we can expect liquidity, at least. I don't want to say support, but we can expect liquidity, right? Higher volume. Now, obviously, we did see that there was a peak here, so it does align perfectly with this little hill that we saw here. And generally, what will happen is that if we start to cover this hill, we start to fall down this hill, we will usually start to interact with the bottom side of these valleys. As you can see, for example, this was another good example. So right here to right here, this was a little bit of a peak. Boom. And as we did start to lose this peak right here, boom, the price obviously did just start to roll straight down into what we consider this valley and then continue to the top side here, losing because this is a lacking of liquidity. So generally we will fall straight through these levels. Okay. So what we can see is that this level between 17.6 to about 15,000 isn't really that strong historically. And so for that reason, obviously, if we start to pull towards the downside where we can expect a little bit of ugliness, you know, at the loss of 18K. Roughly. Looking at it on the minute, so I'm not exactly sure what time frame you wanted us to look at, but we can look at all of them. You know, we are starting to see a little bit of a retest of this point here. Obviously, if we can't start to clear it, we would need to get back above like 19.4 to really start to retest back up towards these higher levels here. We would need that minimum climb above this one because we keep rolling into this little valley here, boom, as you can see, and then we go right back up the hill, okay? And I'm using very simple terms because it's the easiest way to understand it for me. But right now it looks like, you know, the loss of 19.1 on the 4 hours or the 1 minute chart, sorry, does look like at that given point we do start to look at this continuation back to the downside here. So we're seeing a nice little bounce here. What's going on? What's happening here? The Bulls still stepping in. That's one thing I love to see. I mean, the Bulls are just doing an absolutely amazing job just trying to hold support here. We can see this green volume bubble, strong green volume here, matching what we saw just earlier today in terms of red volume. So this is honestly beautiful, right? Just the Bulls stepping in is something that I love to see. I love to see that they're still capable and willing of buying even at levels like this, and it's, you know, pretty clearly being represented within all of this, right? We can see a little bit of a double bottom here on the a little bit of a WW bottom here at around 18.9K. Obviously, we are struggling at resistance right now. Obviously, that does also match up and align with VPVR. No, I don't. I don't have it. But the fact that they're stepping in is pretty surprising, honestly. Like, I love to see it, obviously, but I think, you know, look, we're breaking. We hit 19.28. You know, do we start to work our way back up? I don't know. I don't see a reason as to why we should, but frick. I mean, who's to say what this market can and can't do? You know, who's to say what this market can and can't do? So we can see them holding in, you know, shit. What can you do, man? Ever since we capitulated off of the news, we have now put in what could be a double bottom. The only thing that I am seeing is that we are getting a strong drive on the minutes. So, like, you can see things like the RSI pushing heavy. The hourlies are probably already reversed back to the upside, if I had to guess. or they're trying to stop the. I mean, that's not exactly what I was trying to say. They're trying to stop the pull to the downside, so they're trying to reverse back to the upside and bounce here. Interesting. I mean, it's interesting to see. Today just seems to be the battle between the Bulls and the Bears at this $19,000 level. The Bulls don't want to lose it, but the Bears are still consistently selling here. So who knows, man? Yeah, that's just kind of where I'm at as well. I'm like, who knows? I have no idea what's going to happen here. But that's why I'm not trading it, right? All the people who went super short off of the news, they're probably a little nervous right now. You know, you look at the hourlies and we got such strong bounces here. Right? I mean, that's such a strong bounce. 2 strong wicks, green hourly candle, could very possibly be just a retest back up towards 19.5 before continuation. But the fact that the bulls are stepping in should make some of those shorts a little nervous. Should make some of those shorts a little bit nervous. Interesting. Well, let's give a little look at Twitter one more time, see if anything interesting is going on here. I want to go back to see if they've released anything else. Nah, nothing else here. So overall, I mean, let's see if we have any news or anything of that nature. Nah, not really anything. Maybe if we go to let's see what we got. Okay. Buckle the seatbelts on tight because there's no way that central bank in an environment like that where core inflation is rising, they can't slow down. They're going to have to keep raising if only to maintain their credibility. I agree, and they should, right? I mean, we're probably honestly the issue. So the issue that we see now is, are we going to see a full 1% interest rate hike? That's the question of the day, right? Because I think an 18.8, 18.9, or 8.8, 8.9, I don't think with the CPI reading of that nature, I don't think we would have seen a 1%. But the fact that core CPI grew as well, that's a bad sign. That goes to show that the inflation that we're seeing, the gas, the food, the trickle-down effect is still going and it's raging rampant, okay? And so for that reason, at the end of the month, do we see a 1% full interest rate hike? I don't know. I mean, we could, but I think that we're going to see a lot of nervousness ahead of going into this next month. The next 30 days. So I wouldn't be expecting anything too substantial over the next 30 days in terms of price movement, because I think that people are going to wait to see what the Fed does. But I definitely agree with this. I think that they have to keep going. They have to keep going. Like, they have to just keep going, right? They have to get this thing under control. That's interesting. Let's see. Anything relevant to our stream here? In June, of course, and well above estimates for 8.8. Treasury, okay, let's look at this. So Treasury yields were also higher Wednesday morning, with the most dramatic moves happening at the front end of the yield curve. The 10-year stood at 3.04 following the inflation print, with 2-year yields rising as high as 3.17%, further inverting the yield curve. Wow. The euro also fell pretty below parity, or a 1-to-1 value with the dollar early Wednesday. For a market that has been dealing with recession fears, I think this week will bring renewed fears about elevated inflation. I just don't think so. I think the fact that we're seeing crude oil prices falling is going to be the key identifier that the leading driving factor of inflation is still falling. Like, it's still going to the downside. This has been what has been pushing inflation up. If it is consistently falling down 0.12% today, that is a key sign that going forward, we could very possibly be seeing the bottom of this or the top of inflation. Until we start to see this ticking back up, I'm actually not concerned at all with inflation. So I'm not an economist. I just don't agree. And that's just my opinion. Where was I at? Here we go. June figures also likely see another 0.75 increase. Maybe. We were also going to, maybe they have to raise it. With core CPI growing, maybe they have to raise it even further at this point because they're more nervous and worried about what impact this could have on next month's rates. Or CPI data. Who knows? Maybe they don't. Maybe they raise this up 1%. Who knows? In addition to the latest inflation print, a lineup of quarterly results are also in the queue for investors as major companies kickstart new earnings seasons. Don't ignore this, guys. Don't ignore things like Delta and Pepsi and all that, especially if you're a crypto guy. Don't ignore this, because we've been seeing a pretty strong correlation between the NASDAQ and I think there's a way I can compare this. Hold on. I haven't done this in a while, but There's a way I can do this. I just don't remember the way to do it. There we go. Hold on. There we go. There's a strong correlation here, guys. Okay. There's a very, very, very strong correlation here. Hold on. On the 1 day. Look at this. Okay. Very strong correlation. Let's get rid of all this other stuff. There we go. Damn it. Hold on. Don't ignore this. So what we can see is that although we did get a little bit of a peak at a different time, obviously we had already been pulling to the downside for a few months. Since then, there has been extreme correlation here. Extreme correlation, okay? What subscription do you need for bookmap to see the data you saw? I have the full package. I'm not 1,000% sure, but I'm pretty sure the free version gives you some, like, the general overlook and order book and liquidity and stuff like that. But I have the full package. But as we can see here, this correlation is strong. Okay, so this is the NASDAQ, and this is Bitcoin prices itself. And as we start to see earning seasons go in, especially when we start to see like later on in the week, it's going to affect the whole market. Even if some of these different commodity or these different stocks are not a part of the NASDAQ, they are going to have effect over on the total market. You look at Delta Airlines, that's going to then go on. So, we saw that, of course, they actually missed. So this is reported earnings that missed expectations on Wednesday morning. So Delta Airlines missed. So Pepsi actually beat it, but going forward, we are seeing things like JP Morgan, Wells Fargo, Citigroup, etc. On Thursday and Friday, and I think that this is going to have an effect on the stock market itself, and the stock market has been directly impacting the crypto world as well, which is very interesting. I kind of feel like these larger investors that are controlling the market are... how do I want to say this? I feel as if they are treating all of their investments the same right now. So when they sell when they clear down some of their, holdings from the stock market, they clear down some of their holdings from Bitcoin, right? I feel like they're kind of factoring in, 100 basis point hike won't happen. They'll probably stay at 75. That's what we think. But at the same time, we missed substantially, It's always something to think about. I don't know what they're going to do. I'm not in the Fed. I have no idea. But the biggest thing is consider is how do people's anticipations of them possibly raising it then affect the market? That's where my mind's at. But again, what we can see here is that there's a direct impact. So not only are we now going to see volatility due to what has happened with inflation, but we are also going to see volatility over the next 2 days as we do get a little bit of movement here from things like Citigroup, Wells Fargo, JP Morgan, etc. But yeah, okay, so realistically, I mean, that's about it for today. I feel like we've kind of covered all the points and bases and what the levels that I thought would be important. Of course, we are still saying the battle at 19.2 to 18.8. It's holding up quite well. I love to see it, man. It's just absolutely beautiful. Looking here, it's holding up quite well. Looking at the hourlies, let's get rid of the NASDAQ for now. We can see strong wick to the downside, obviously did hold up. I would say at this point, 19.1 does become the key level of support. The loss of that based off of these previous, this low here and where we are now, it seems as if right now we lost this point and we're back testing it. And if we fail this back test, we're going to capitulate. We're going to capitulate hard. We lose 18.8. Do expect us to start to pull towards these 18,000 to, the inflation was at 9.1%. Sorry, 9.1%. But again, we fail this back test here, boom, and we don't get back above like 19.5 thousand. Do expect this capitulation towards 18. Once we lose again, 18.8 thousand, expect it to start to come back towards 18,000. I wouldn't even be shocked to see 17 point something. Okay, so that's what to be on the lookout for today. I'm gonna go ahead and wrap this stream up because we are about an hour and a half in, of course. Now, before I do wrap it up, I want to go ahead and give the chat the opportunity to do a Q&A. So what I'm just gonna do, I'm gonna chill for 4 or 5 minutes. I'm gonna answer any questions that you guys do have. I completely forgot this whole time to be moving the color source. Right here, this thing to let you guys know what we were doing. So I'll go ahead and do timestamps after this stream does end. But any questions you guys have, feel free to go ahead and leave them down in the comment section. Put them in the live chat now, and then we're going to go ahead and wrap this thing on up. Absolutely heart of steel. Anytime. Anytime. Should I sell some of my big assets now? I'm not. I don't. Oh, God damn it. I'm about to go down a tangent again. So personally speaking, when I think about crypto, when I think about everything, I just look at this and say, you know, if say the Mount Gox thing does happen, which is kind of like the thing on all the back of our minds right now, and say we capitulate, right? Say we capitulate to $10,000. Realistically, from where we are now, that's 47%, almost 50%, right? So if I think that's worst case scenario, I don't foresee us going under 10K. I don't think we have a reason to go under 10K. And realistically, everyone thinks we're going to go lower. And that's usually when we start to bounce, right? So if personally, you know, the support right now is between 19 to 18.8 thousand dollars. If we lose 18.8, expect a push capitulation down to around 18K, somewhere around there. Okay. But personally, looking at this, I think that the minimum downside or the maximum downside is somewhere around 50%. We've done way worse than 50% at this given point, right? From if you bought literally on the worst day possible to now, you're down 72%. If it goes down another 50%, sure, that does suck. But at the end of the day, when we consider long-term potential upside, if you genuinely believe in cryptocurrencies like I do, and say if you just believe we'll hit 100,000, no, let's just say you think we're gonna hit $88,000, a random number, $88,000 one day. From where we are right now, that's 360% in gains. Okay? That's 360% in gains with a 50% downside risk. I just don't see the point in selling when our risk is so minimal, in my opinion. The risk is that it goes to zero, but I just don't think it will. But the upside is just so much more extreme than the possible downside. I don't see the point in selling at this point. I think it makes more sense to be buying here than selling here, just like it makes more sense to be selling here than buying here, right? So in terms of risk to reward, the odds are in our favor at this point. So I don't see the point in selling, personally. Just my opinion, though. Do as you please. Would Mount Box be priced in ahead of time? I don't know. I don't know because I don't think anyone knows exactly what people are going to decide to do. The only way it would be priced in is if they come out with a survey or a release of how much of the Bitcoin is going to be released to people with intentions to sell it. We would have to be able to somehow anticipate how many people are going to sell it before we can factor that in. Sure, it may kind of start a downtrend a bit, and then it happens, and then capitulation. In terms of factoring it in advance, I don't necessarily see exactly how we could come up with a fair value judgment because we don't know who's going to hold, who's not going to hold, you know? Thanks for your analysis, man. I will do some DCA perhaps. I certainly believe in crypto. Well, hey, I believe I do the same thing. When you Chevy, yeah, really. I'm telling you. Shout out Jim Jarvis. Voyager is pumping hard. Price prediction. Is it? What's Voyager's stock? What's Voyager's ticker symbol? Hey, this ain't it. Let me know what Voyager's ticker symbol is. I have no idea what it is. I don't follow its price really. What did you say? Okay, we got that one. How about HT token? I don't know what HT token is. VGX. Okay, cool. I'm not very much of a crypto stock mix type of dude. Like I don't have any Coinbase stock or anything like that. I'm just not a big fan, honestly. Voyager crypto genius. Okay. What the hell? Okay. Whoa. Whoa, 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 whoa. I mean, in the broad sense, like this looks good until you look at the macro. But I mean, that's a freaking huge pump today, man. Pulling from 0.30 up to 0.85 is insane. I don't know. I have no idea. Is there, I mean, was there news? Voyager Digital was one of the biggest crypto exchanges, blah, 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 has come into the spotlight now that regulators and law enforcement officials are investigating it. The VGX token is surging as investors react to the statement the company published on Tuesday. Okay. The company reiterated that it held about 1.3 billion of crypto assets on its platform. It also claims that it also has claims against 3 Arrows Capital. They filed Chapter 7. They're not going to get anything. It also said that customers will be able to withdraw these funds when the reorganization plan ends. Oh, well, that's good to know. That's good news. Therefore, VGX price is rising as investors cheer these events. As I wrote before, assets in trouble are also ripe for pump and dump schemes. True. For example, we saw Celsius token jump sharply even as the company's challenges emerged. Hertz shares also jumped after the company went bankrupt. That's a fair point. Now, this is not guaranteed, but this is obviously a good sign. But I didn't even see this. This is great news, honestly. For benefit of customers account, the amount of USD held on is equal to the amount of USD in customers' accounts. USD deposits will be available after reconciliation and fraud prevention process. Okay, well, so that's not what people are asking though. They're not asking about their freaking USD. Kind of. They're looking for their Bitcoin, their ETH. Where's the ETH? $1.3 billion of crypto assets on his platform, plus the claims against. This is not going to happen. They're going to just spend money for no reason. When a company files a Chapter 7, the odds of you getting paid from them are so little. Of more than 650 million. Under Voyager's proposed organization plan, how much do they have in customers' holdings? Because I know it's more than 1.3 billion. Nothing's going to happen here. The plan is subject to chain negotiation with customers and ultimately a vote. In Voyager's case, customers are the primary credit. Bullshit. And will have an opportunity to vote on the proposed plan of reorganization. We put together a restructuring plan that would preserve customer assets and provide the best opportunity to maximize value. In addition, the company is pursuing various strategic alternatives to evaluate the value of the standalone company. Okay. This isn't good enough to make me want to buy it. It's very meticulously worded to make people feel good, but there's really no guarantees or anything good in here other than the fact that this seems decent. That people will likely get their USD back due to the fact that it's being held in a bank of a 1-to-1 value, maybe. Until they go bankrupt, even further into a Chapter 7 after the reorganization plan, if they do. So that's decent news, but that's just not convincing enough for me. And let's not spam, guys. But, yeah, that's suspect. But anyway, I'm going to make a video on that. I want to go make a video on that. I'm going to do that like right now. So that's going to be about it for the stream, guys. I hope you guys did enjoy. Obviously, I did enjoy the stream. It was great to kind of cover the release for you guys over the last hour. If you guys did enjoy the stream, of course, please do let me know. Just drop a like on the video. That's all I ask. I don't ask you to do anything else. I do post all of my trades in my Patreon. I've been kind of telling you guys about that this stream. I don't really show that much. I don't show the actual trades and the things that I release, but this is something I have been doing. Obviously, I let you guys know in the last 8 weeks, we've been 7 for 7. We're up about 41.5% in our trading portfolio, hedging against the losses we've been seeing in the broad market. And so it's interesting. This is very interesting. So, it's great to see that we can make gains against the losses we've been seeing in the market. So definitely check that out if you want to. Times are rough. Money's not easy to come by right now. So I'm gonna keep making free YouTube videos. I don't want you guys to feel like you need to pay for stuff. Don't. If you can't, don't. That's the biggest thing I will say. One more question. Do you differentiate between paid promo for projects versus projects you genuinely like when you make your videos? Yeah, I will. So I get dozens. I mean dozens of promo offers on my channel. For various amounts of money. And what I say is that I need a reason. I go through them all because I like microcaps. I like looking for new cryptos. But personally, if I wouldn't buy it myself, I don't bring it to my channel. And that's kind of my go-to, right? So if I like a project enough to the point that I would buy it, yeah, I bring it to the channel. If it's a paid promo or whatever, I always say, like I've partnered with them. They're sponsoring this video, whatever, because I want you guys to know that. But at the end of the day, these are crypto projects I would bring to my channel one way or another. Okay. And so, I've never put anything on the channel that I didn't like, and I never buy anything before I put it on the channel. That's also another rule I go by. So I do paid promos just like everyone else. Obviously, if you're going to watch TV, there'll be commercials, and if you're going to watch YouTube, there's going to be promos, right? So that's just kind of how it goes to continue paying my bills. But at the end of the day, I don't post anything that I don't like. So with that said, that's about it. I hope you guys did enjoy today's stream, and I will see you all later on. I'm gonna make a Voyager update video and kind of talk a little shit probably. So stay tuned for that. And yeah, a great buy right now would just be some more Bitcoin. But with that said, that's about it. I'll see you all next time. Peace.